Hey guys, and thank you for joining me in today's video. So it's been a while since we've done a Technical Tuesday, and I know Sean did a great analysis of USD CAD that's currently on our YouTube channel. Go ahead and check that out. And I thought it'd be a great time to actually show you my stance, my current stance, and my future predictions for GBPUSD, one of my favorite pairs that I analyze here at AstroFX, and that I post my free analysis on everythingfx.com every single trading day. So in this video, I'm going to try and take between 5 to 10 minutes and show you a bit of the historical data and going back a little while, possibly the last year or so, on GBPUSD, my current stance, and then hopefully where I believe this pair is going to go. I'll be doing this video on a blank chart. Decided to take a different approach to what Sean does. I'll be doing this video just using simple price movements, raw price, and showing you from key levels, from selecting current ranges and understanding patterns in the market, how we can analyze this pair. So I hope you guys enjoy this video. First, I'm going to go back all the way to June 2016. So this was the point in the market in which Britain voted to leave the EU. This was a 1800 pip fall, an absolutely massive dramatic move in this pair's history. So GBPUSD plummeted from 1.502 roughly all the way down to 1.32300. This 1800 pip fall was massive for this pair, and I'm going to go ahead and actually show you what happened afterwards. So after that, we actually went and created a level of support. So I'm going to go ahead and actually use this rectangle tool right here and show you the support. For me, this was at 1.29. Again, all key levels that I'm going to be sharing, all key levels are just not one price, it's an area. So from 1.29, that area right there, we had a range of 450 pips. This price was trapped between from 1.33500. So I'm just going to go ahead and draw that there. So this is a 450 pip range in which the price was then trapped for from the period of, I think, from June to August 2016. Now after that, I do believe the dust wasn't really settled from this Brexit move, and after it's consolidating for some time, we actually fell through and broke that 1.2900 support. Now I believe this was from jitters from the Brexit. This was from investors leaving a faith in the pound, so that led us all the way down and plummeted another 200 to 300 pips. Now this point right here, for anyone that's new, might be looking at this like, what kind of move is this? So this is known as a flash crash. So this was on roughly, I think it was on 7th of October last year. Now, but a flash crash, no one actually ever gets to blame, in particular blame for this flash crash. Some people believe it's algorithms that have basically to be blamed that went wrong. Some people believe it's inexperienced traders. Some people believe it's people at high up banks that have fat fingers. But this right here was in the space of roughly about an hour or so, where the price dipped low 800 pips from roughly 1.26, which is around here, all the way down to 1.18. And within the space of literally half an hour, so about 30 minutes or an hour or so, it came all the way back up to 1.24. So just there. So this flash crash was a very significant day in this market. And ever since then, the price went back to consolidating. So as I showed you that range before, I'm going to go ahead and zoom in. I'm doing all of this on a daily time frame. So I'm going to just zoom out a little bit more. And what we can see right here, again, using my rectangle tool, now I can see that this price at this point found support around 1.21. So roughly around there. And then it was trapped within this range. I'm going to go ahead and draw the top of this range around 1.22500. So roughly there. So 1.2100, just roughly there, to all the way down, all the way up to 1.25500. So if you actually do your maths, this was a 450 pip range. Believe it or not, an exact 450 pip range. This price was stuck between for a period of 6.5 months, from October 2016 all the way till April this year. April this year was a very positive day for this pair, as we had a near enough 350 pip move in one day. So after all that consolidation, the one thing I always say to traders is the longer the consolidation, the more powerful the breakout. And as you can see, that's represented quite well in this example. Now this move right here, some people believed it was from positive figures of reports from retail sales for the pound. Some people believe it was the Prime Minister announcing its election. For me personally, this was the dust finally settling after all of this Brexit, announcements that were happening and the various outlooks on that, and a lot of the uncertainty behind the pairs. So this right here led us back up, and ever since then, so I believe this is around about August time, August 2017, we actually then have created this little higher low right here, and then another higher high, then another higher low. So ever since then, we've actually been showing a nice bullish perspective on this pair. Now, I'm going to go ahead and draw on a monthly key level for you guys. So far, I've drawn you ranges. I've showed you again previous price history, but I'm going to go ahead and actually draw on a strong monthly resistance on this pair. So right now it's the current support, which is at 1.300, which is there. That is one of the most significant levels for this pair. So I'm going to draw that on, but I'm also then going to show you what happens if I go back in history. So as you can see, when the price actually eventually had its impact from the Brexit, it actually found support level at 1.3, showing you how much of a significant level that is for this pair. And even right now, it's still very, very relevant. Now, the second thing I'm going to draw on, to keep it very simple for anybody that's new, is a nice and simple trend line. So I'm going to take this little low right here and go ahead and show you 0.1 and 0.2 and 0.3, and from Sean doing all of his analysis videos, you guys should know 0.3 is the most important point on our trend line, and it's basically our bounce zone. So 0.1, 0.2, 0.3. This was back in, I think it was September, where the price eventually then went and broke 1.300 there. Once breaking 1.300, we have a 600 pip climb from this point right here all the way to this high. So next thing anyone should do is go ahead and always understand and select our high on this pair. So the overall perspective on this medium-term outlook is the market is creating those higher highs and higher lows. However, after the recent higher low here, the past 2 months, the past month and a half, 2 months, I've been analyzing this pair free on Everything FX. You guys might have noticed we've been trapped in a very strict range. So the previous range that I drew on were 450 pips. However, this time round, I'm going to go ahead and get my rectangle tool, and this time I want everyone to draw on a key level. This is a daily key level for me. I'm going to go ahead and draw it on the 1.31 mark, just there. And what I'm actually going to do is again, I'm going to zoom in so you guys get a better perspective of why I've drew that level on. So as you can see, various rejections holding as a strong level of support. Then, keeping it very, very simple, keep my chart very clean, I'm going to go ahead and draw my next level of resistance, which I believe this price is trapped between, which is 1.33. So that's a 200 pip range from 1.31 to 1.33. Now, how do we trade this range, you guys might be asking. So once we've actually identified, I'm going to go ahead and drop to a 4-hour time frame and actually show you. I'm going to go ahead and draw, I'm going to go ahead and delete this trend line just for a little bit, just to make life a lot easier for you, everybody. So whereas previously I was talking about the market creating this nice higher highs and higher lows, when identifying a sideways market, there's two things you can say, and I always say this to my students. One is the market is creating equal higher highs and higher lows, which obviously is this case here, or it's not creating any whatsoever. And you cannot include these 5 or 10 pips differences as higher highs and higher lows. So the market is completely sideways within the zone. So what could we have done to capitalize on trading a sideways range? So one thing we must always understand is market manipulation. So these little key levels right here are great points in which the price is going to dip its head above, but then not manage to break above. So by using my risk to reward tool, I'm going to go ahead and show you, just by keeping it very simple, about once this price could not break above 1.33. Now if you look, previously we almost had a little bit of a slight retest, and then we had a nice little fall in the market. So once this price could not create a new market high and could not really keep the price above 1.33. We had a rejection, and for anybody that's noticed any candlestick patterns, you'd notice that we had a nice little bearish engulfing candlestick right there. That as an entry. Now, where do we put our stop loss? Well, I'm going to place it 10-15 pips above this wick right here. Why? Because if it was to take out this wick, that means that it's actually confirmed and broke out of this range. And then our target, keeping it nice and simple, trading it from key level to key level. Now, that right there is a 1 to 1.8 risk to reward level, putting our target at 1.31, sorry. So that nice little risk to reward from shorting this pair around the 1.33 level, taking consideration our entry here, trading it all the way down to 1.31. Now, how easily could you have traded this range again? Well, let's just take that and put it right there. History repeating itself. Market tries to break above, could not do so. Comes below, shows the indecision. Boom, nice little bearish candlestick right there. And there we have our target right there. Now, this move was also actually caused from the start of this month, which is there. This was the actual interest rates that were being raised for GBPUSD. So interest rates were raised from 0.25 to 0.5. Now, this is why you can't trade solely on fundamentals, because normally this would be a positive impact for this pair. However, I believe the markets wanted a little bit more than an interest rate increase. They wanted more of a hawkish stance on the future, which they did not get. And certain comments around the interest rate actually said that this will possibly be the only and last interest rate increase for the next 2 or 3 years. And the market, of course, had a massive plummet. So the fundamentals, combining that with this technical, as you can see, we could easily have traded that key level again. So that's just a little examples of how we can actually go ahead and collect that nice little 170 to 180 pips out of this 200 pip range. Now, up until recently, the price was trying to, again, break that 1.31 level. And all I did was I was very patient. I didn't let this fall right here influence my decision. I just wanted to hold on and see, could the price again break back above 1.31? Now, I'm going to go ahead and draw my trend line on, so my second trend line, just keeping it dead simple. And again, 0.1, 0.2, 0.3. So I've just zoomed up on this 4-hour time frame right here. 0.1, 0.2, and 0.3. Look at that there. Zooming in, we have our 0.2 and our 0.3. Now, when we had that bounce on that 0.3, all I was looking for was the price to go ahead and confirm, break above, and keep above 1.31. As soon as I got that entry, for anybody that's a member on the Everything Affects Technical floor, you would have seen me scream and shout this, that if we can close back above 1.31, that would be a brilliant entry for us to go ahead and try and trade this thing back up to 1.33 right there. And our stop loss can simply go below that trend line right there. And also putting it a certain distance away shows that the price was to come down and take out this low. That means we're going towards our monthly, but we are still trapped within this range. So one of the other things I'm going to go ahead and do is give you guys a nice little weekly key level of mine. So using my horizontal ray, this is at 1.32500. So you always have to identify different barriers within the price. So 1.32500 is just there. Now that is something that I shared as a target on today's technicals and to my members. So literally the end of last week, we went ahead and bounced exactly off that target. And so I still have some of my position on because I'm actually expecting this thing to go up to head and test 1.33 very soon. But I can see that there is some sort of barrier holding the price just here. So that's my stance on GBPUSD. And hopefully you guys can see that I've taken patterns in the market of being able to trade consolidation periods, not being afraid, being able to understand, okay, I need to change the way that I'm trading. If I'm trading more of a long-term medium base, which is normally my style, I must change and adapt to the market conditions. So that is my perspective on GBPUSD going ahead this week. This move right here, I'm just going to go ahead and delete that for a second, but various little fundamentals actually have helped this pair. So the past week, we've had positive reports for services PMI. We've had good manufacturing production come at 0.7, average earnings, retail sales. So those things on a daily perspective, which I'm going to go ahead and jump back to, you can see have helped various daily closes look very, very bullish for our target to be achieved at 1.33. But where is this thing going overhead long term? Overall long term, I'm going to go ahead and zoom back out. So if you go back to where I was saying the market creating those nice higher highs, higher lows, higher highs, higher lows, I do believe that 0.1, 0.2, 0.3, once we go ahead and we manage to crack above 1.33, we will then be revisiting 1.36, taking out that high. Now, I do believe that if we carry on having a bit of consolidation period, this could take a while, but this could be the comeback of GBPUSD going ahead and possibly trading back above 1.36 will be great for this pair. So hope everyone has understood why I've actually gone ahead and done this video to actually explain trading between this range, and hopefully everyone appreciates the bit of historical lesson that I've given to show how the market can go ahead and repeat itself, taking those consolidation periods and using those patterns to go ahead and predict future price movement. So hope everyone enjoyed that video, and hope everyone could take something away and add to their own trading. Thank you very much, and let's see if we can have a comeback of GBPUSD. Thank you.